Welcome to the OSINT Sport Podcast, where open source intelligence meets the fast-moving world of sports finance. I'm Gianluca, and you can find more insights at osintinvestigate.com. Today is March 22nd, 2026, and we're diving into how OSINT techniques are reshaping the way we understand money flows, ownership structures, and strategic moves across global sports. Let's start with one of the biggest trends right now: multi-club ownership networks. Using OSINT tools, from corporate registries to leaked filings and satellite data, analysts are uncovering increasingly complex webs of ownership. Investment groups are spreading risk across continents, acquiring clubs in South America, Europe, and Asia. What's interesting is not just who owns what, but how capital is routed. Shell companies, minority stakes, and layered holdings are often used to navigate regulatory constraints like financial fair play rules. From a finance perspective, this creates both opportunity and opacity. Clubs can share talent pipelines, commercial partnerships, and even data infrastructure, but it also raises questions about competitive integrity. OSINT analysts are now mapping these networks visually, tracking beneficial ownership, and identifying patterns that traditional reporting often misses. Next, let's talk about player valuation and transfer intelligence. The transfer market is increasingly data-driven, but OSINT adds another layer. Social media activity, geolocation tags, private jet tracking, and even training ground sightings can signal upcoming deals before they're officially announced. For investors and betting markets, this kind of intelligence can be extremely valuable. We're also seeing financial leakage and inefficiencies. By analyzing public procurement data, sponsorship filings, and local government disclosures, OSINT researchers have identified discrepancies in stadium financing and infrastructure projects. In some cases, projected revenues don't align with actual attendance data, something that can be cross-verified using satellite imagery or ticketing platform analytics. Another major story today is the rise of sovereign and institutional capital in sports. Pension funds, private equity firms, and state-backed entities continue to view sports as a long-term asset class. Why? Because media rights, global fan bases, and digital monetization offer relatively stable returns compared to traditional sectors. However, OSINT reveals a deeper layer: strategic influence. Investments are often tied to geopolitical goals, soft power, international branding, and economic diversification. Tracking flight logs, diplomatic visits, and joint ventures can provide clues about future deals before they hit the headlines. Let's not forget sports media rights, which remain the financial backbone of the industry. Today, fragmentation is the key theme. Streaming platforms are competing aggressively, and rights are being sliced into smaller, more targeted packages. OSINT analysts are monitoring job postings, tech infrastructure rollouts, and CDN partnerships to anticipate which platforms are gearing up for major rights acquisitions. Finally, a quick look at emerging risks. Financial sustainability is under pressure in several leagues. Wage inflation, debt accumulation, and over-reliance on speculative revenues are creating vulnerabilities. OSINT can help flag early warning signs: delayed payments, legal disputes, or unusual corporate restructuring. So what does all this mean? It means that sports finance is no longer just about balance sheets. It's about intelligence. The ability to collect, verify, and interpret open-source data is becoming a competitive edge, whether you're an investor, analyst, or even a fan. That's it for today's episode of the OSINT Sport Podcast. I'm Gianluca, and if you want deeper dives into OSINT, finance, and global investigations, visit osintinvestigate.com. Stay sharp, stay curious, and I'll see you next time.